And we're live.
Oh, I was trying to time it. Let's try to time that clap there.
Synchronized clapping. And I just realized I've done something different today. I've put this on everywhere. So instead of just being in the group, this is everywhere. Anyway, that's fine.
Bonus material.
Bonus material for everyone. How's your day going, Jeff?
Well, it's only a couple hours old. So, well, I shouldn't say that. It's been up early with the 2-year-old. But anyway, the work day has just started. A couple hours into it, not so bad. Got some things lined up. Gonna be a nice day. Yeah, I don't know. Can't complain.
Perfect. Awesome.
Tomorrow's a holiday here, so a double reason to not complain.
So, yeah. Excellent. I like it. Well, that sounds fun.
Yeah. So
cool. So it's Tuesday, which means we're doing training Tuesday. No, we normally do this in our Facebook group, but as I mentioned, I've put this everywhere. So what are we talking about
normally today? We reserve some secret material for this group, but yeah, you had sort of an idea here to talk about the difference between a broker and an advisor when you go to sell a business. And just yesterday we looked at a deal that that was represented by a broker that we felt was seriously undervalued. We've also dealt with somebody who went to a different brokerage because they were shopping on price, and again we've seen the listing and it's seriously undervalued, and it's painful to see people. I mean, it's their prerogative, whatever. I mean, if people don't gel with us, or they don't understand the process or whatever, I mean, that could be the same for any broker. I mean, you really need to find a good fit, and that's fine. I mean, personally, I don't think we're hurt. I mean, if somebody chooses another broker for those reasons, that's fine. But man, when somebody's leaving money on the table and it's blatantly obvious, and it's because they didn't really want to put in the effort, that's just like, oh man, like I can't think. Like, I think in that case, we did the math, and he probably left about $2.5 million on the table. That's if he sells for that target list price that they listed at, which was a huge mistake. But even if they sell at that limit, like if they do hit that exact number, and they want to shop around on commission, if that's really what you're shopping on at an 8-figure exit, man, you're looking at things the wrong way. Because that, even with a little bit of a higher commission, so two things, even with a bit of a higher commission, leaving $2.5 million on the table, and second, going to a different broker because he dropped his commission, what does that tell you about their negotiation skills when they're going to bat for you in a boardroom in front of us? You're talking 8-figure exit. You're dealing with savvy professional investors. You're not dealing with run-of-the-mill SBA buyers. You're not dealing with you're dealing with a different level of investor. And if they're going to bring out their checkbooks and write that many commas, they're, you know what I mean? Like, they're going to look under their hood. And if you're not willing to put in the effort then you are going to get lowball offers. And man, just a little amount of work up front. Anyway, here we go. I'm off on a rant again.
No, it's totally
not
true.
Even starting out talking about the difference between the program. Just like, this was born out of yesterday's Market Watch.
Yeah, so it's a pretty touchy subject for us, but I thought it'd be useful to revisit this concept. We've talked about it before, but just that's actually a great way to start, because $2 million, $2.5 million left on the table. That's, I don't know about you, but I could do a lot with $2.5 million, right? That gives you a lot of options. And that's
even if I already had $10 million in the bank, that doesn't make $2.5 million seem like any less of an impact or any less, whatever. I mean, anyway.
Yeah, it's real money. That's a lot of tacos, and
it's a lot of tacos.
So I think where the main difference, if I was to be asked what is the difference and how do we think about it, it might be useful to kind of explain how we've evolved, because broker is in our name. Not for not much longer, but it's there for right now.
Secret.
Something big is coming. But so we've kind of evolved from a business broker, and along the way, I've realized that business brokers get a pretty bad rap. And the reason for that is most business brokers, the average business broker out there, and this is the way we started, so I'm not saying I'm any better than anyone else. The industry works very similar to real estate, right? You go out there, you try and get as many listings as you can. I'm talking about the business broker, right? This is how their business model works. They go and get as many listings as they can. So we've got all these businesses for sale. The number one reason they do that is to generate interest from buyers, because, oh, look, you have so many listings, right? So having more lines out there with your fishing, pulling in more buyers, and then they buy whatever they want. And that's how you survive as a business broker, because you're paid success fees only, and that's how their business model works. Now, that's fine, and that is what it is. It's the same with real estate. But if you're the business owner and you're wanting to maximize the exit, if you're wanting to sell your business for the most amount of money possible, make sure you get the best deal, because you never really know, right? Even if you get an offer really quickly, well, if there's nothing to compare it with, you don't really know. So over the years, we've evolved our process significantly and realized that the M&A investment banking world actually has this the right way around. What the standard is there, which is very different to what a business broker does, is they work on this business and they build a deal team around that deal. So they're positioning, and that's what we do. We position to sell your business for the highest price, best deal terms. And we don't just take any business. We take people through a 3-step process. The number one is, we've talked about this before too, but the number one is, are you mentally ready to sell your business, right? That's a big step. We don't just list things and see. You need to be ready to sell.
And it's not as simple as, well, if I get the right price, I'll sell it. It's not that simple.
Yeah,
it's not that simple.
That's where a brokerage or a marketplace can be useful if you just want to test the market, right? Because they don't put in a lot of work up front. Their whole team's not promoting your deal. If you just want to kind of, let's just see, great, go over there. They'll happily do that for you. That's not how a sell-side advisory works. But if you've built a business to 7-8 figures, you're ready for a meaningful exit, then considering a sell-side advisor as an option is a good thing to have in the mix, right? So what we do is, like I said, we work on the first step, which is, are you ready to sell? Because you need to be committed to sell. The second thing is, will the market pay what is an exciting number for you to sell? And that's where our market data comes in, because we have a ton of market data in different verticals, categories, business models, etc. We can put that together for you. Is the market likely to pay the range that you're excited to sell for? And the third thing is the business ready to sell, right? And this is the step that no business broker does, no matter what they say, because they either don't know how to do it, don't have the bandwidth to do it, or they're just lazy and don't want to do it, right?
So not part of their business model.
Exactly, because they're just wanting 100 listings. And a lot of them do have 100 plus listings, and that's fine, right? That's a different business model. But what we do to ensure that we can get the best outcome for the client or a sell-side advisor, what they'll do is they'll go through the business, a full analysis of the business like an investor, to find any red flags, to find any hurdles that an investor would have to getting the deal closed. So we do a lot of prep work up front. I had a conversation with someone about this once, and I was saying how we filter the businesses we take to market, and we use this focused approach. And he actually asked me, he said, "Oh, is that like cheating?" And I said, "What do you mean?" He's like, you only take the best deals to market and you promote them to the right buyers." I'm like, "Yes." And he said, "Is that cheating?" I'm like, "Well, if that's cheating, yes, we're cheating."
Yeah.
But it seems obvious to me.
I like your description of stacking the deck in our favor rather than cheating.
Yes.
It's not cheating. I just think that, like, you're gonna find out as a seller, you're gonna find out how ready your business is to be on the market at some point.
Yes.
It's either going to be in front of your sell side advisor, or it's going to be in front of the buyer.
Mm-hmm.
I would rather it to be in front of a sell side advisor, because that's the thing, right? I mean, if we break it down into like the definition, like a broker is there to broker deals. They're just trying to find you a deal.
Yeah.
But an advisor is giving you advice. They're holding your hand a little bit through the process, right? So they're advising you on each step of the way. And so I think it's a bit of an important distinction, where a broker, clean break, breaks a deal, it's done, move on to the next one. But an advisor is a bit more of an all-encompassing role. And part of that is advising you on the readiness of the business ahead of time. You don't want to find that out across the table from a buyer when they come across with a new offer sheet saying, here's what we found, and this is how it changes the deal.
Yeah,
that's not the place to find that out.
Exactly.
It's not a comfortable position to be in, and it's not a good spot to be negotiating from. If you know all of that stuff up front, then you're negotiating from a position of leverage. You understand the business. Everybody on your deal team understands the business, and has seen under the hood, warts and all, and we know everything about it. We don't want to hold anything back, and that's just such a key piece of the process.
Yeah, absolutely. Yeah, it just.
And like I said, you're going to find out anyway. You're going to find out anyway.
Yeah.
Whether you go with a broker, and you want to list it, and man, we've seen the market data. Man, some deals have been on the market for more than 3 years. Right. That tells me they're not committed to selling. They're not really committed to running their business either. But you can't tell me nothing's changed in 3 years.
Yeah.
And so they're going to list that business, and it's just going to be up there with 100 other listings until the end of time. And a buyer's going to come along and pick it off the shelf and say, yeah, okay, I'll take a look. And then they're going to do all their due diligence. And we're going to find out the reason why that business has been on the market for so long. And they're going to say, okay, pass.
Yep.
And that seller is never really going to know why,
Yeah, so, exactly. Yeah. And speaking of market data, we've been talking about this for years now, but the sell-through rate of the market as a whole is around 20 to 25%, depending on when you're looking at the data. So out of 100 businesses that just go up for sale, only about 25 at best will sell within a 12-month period. That's not stacking the deck in your favor, right? No. So a lot of those businesses shouldn't be listed. Some of them are underpriced, some of them are overpriced, some of them just will never pass diligence because they haven't done the work up front to make sure the business is ready to sell, in the best position to sell. So I think that's the first difference, is working, like you said, a broker is more transactional. Let's list it and see, and that might be fine. If you're wanting to absolutely maximize the exit that happens from selling a business, all the blood, sweat, and tears you've put into the business, including maybe not now is the time to sell. Let's figure out when the right time to sell is. That's also part of our process. And a good sell-side advisor should be able to help you with this. So that's the first step. Then once we know the business is actually ready, so we've done that deep dive on the business, when we actually go to launch, this is another piece that's very different. We often get asked, and I know you get asked this too, how big's your buyer list? Who's on your buyer list? Who are the buyers? Everyone wants to know, who's going to cut the check. And the interesting thing that how our process has evolved is we now go and find buyers for that specific deal. So we look at specific categories, who's active in this space. Let's go reach out to them if they're not already on a list. And most of them aren't. 60 to 70% in some cases are brand new buyers to us, but we know how to talk to them. We know how to get to the right people. We sit down with them, we go visit them, call them, email them, send them videos, whatever it takes to get in front of the right person. So they know that a deal's coming, and they know that there's going to be a window of time that they get to look at this deal. So we prep the market for that deal, that buyer list, for that deal coming out. right? That takes our whole team's focus. We only launch one deal at a time because we all focus on this, right? Everyone's focused on this. Even Jeff, he's working with new sellers. But even you, mate, like you're out there looking for sellers and you're saying, hey, what about these guys as buyers? Or we're having team calls. Who could be the best buyer for this deal? It's a very encompassing approach to sell the business. So literally our whole team works on this. Once we launch, once we have a date, we have a deadline. And it's a 3-week window for buyers to place a bid on the business, right? So that actually you have buyers competing for your business. We don't use a list price. We don't want to limit what someone will pay for your business, right? This alone is crazy to me, that your broker or marketplace will set a price for you, like we saw yesterday, unless there's something seriously wrong. That is super undervalued. And the deal you talked about at the beginning that we were talking to that went elsewhere, again, super undervalued as a list price, because we've seen in that deal, that specific category, we've had buyers jumping over each other to outbid each other on that for much more than what they're listed for.
That's going back to that definition, right? That broker's job there is to broker a deal for you. They're trying to get you a deal. That's it. An advisor is going to advise you on how to get the maximum value for your business. And they will advise you sometimes to not sell to specific people. I mean, the whole thing, right? I mean, this is a team, like you said, a deal team. If you have a broker, if you just want to list it up there and get what you can for the business, then fine, Godspeed. But that's just, God, like to me, when I look at a deal like that yesterday, it is and it isn't. But I say, like, it's not the broker's job to tell the world the maximum value for your business. I mean, I guess in that case, I mean, they're saying it is their job to say, okay, well, here's what I can get for you. And then my second thing is that just want to jumping on the buyer pool thing. If anybody says that they've got an exclusive buyer pool, they're kind of full of shit. Right? I mean, professional buyers, professional investors, professional deal makers are on everyone's list.
Yeah.
And it doesn't matter if your list is 1 billion people long. If the right buyer, the right partner, I should say, is not on that list, then it doesn't matter.
Yeah.
So that's where, coming from an advisory role, to say, like, okay, well, let's advise you on who the right buyers would be, who would want this deal, and let's go find them. And I like that term launch, because that's exactly what it is. We're pushing that deal, we're launching that deal into the market, rather than, there you go, come and see it if you want it.
Do you want this one or the 20 others that are just
oh, you don't want this one? How about that one? Okay, well, what's your budget? He's like a used car salesman. So
exactly.
Anyway, so
it's a totally different approach. So the ideal outcome, and there is risk with no list price, right? 100%. We often see polar opposites when it comes to deal terms. So when there's no list price on something, we had this recently on an 8-figure deal. A buyer just thought that meant, well, I can offer whatever I want, and effectively they can. It was a ridiculous offer, but they didn't get to talk to our client. They were talking to us, right? We were filtering them. Julie was filtering them first, then I was filtering them. Once we figured out they're not the right buyer, they were asking to get on a call with our client, and we just said, no, this isn't going to work. You can go somewhere else, mate. This is not how this is going to fly.
Right. So, and that's the thing, right? Like, we are that wedge between the buyers. I mean, there's going to be lots of people asking to see privileged information. And it's important to note that they don't see it unless they've passed through careful vetting. They don't get to see your information. They get to see some teaser material. But in order to get to that next stage and to see that privileged material, they have to pass some pretty serious vetting and prove that they can close the deal. That's anyone can say they've got a bunch of money in the bank or have access to money, but that doesn't get them access to see these listings, right? So that's another key point, is that having an advisor as part of your deal team can really help you, so that you're only talking to people who can write a check.
Yeah.
And then at the end of the day, you get to choose who you partner with.
Yeah, absolutely. And the size of that list, while we were talking about buyers before, it kind of reminded me, we've had success with this approach anywhere from 50 buyers to 200 buyers, targeted buyers. But like you mentioned, not everyone sees a deal. So let's use 100 as a ballpark, right? What if there's 100 buyers that we're pushing this deal into the market to? Well, out of that 100, about 20 to 25 will get through that process, prove funding, sign NDAs, see the marketing materials. Out of that, typically we'll see anywhere from 6 to 8 indication offers. Right? So almost 50% of those buyers that are serious will place a bid because they know how this process works. Mm-hmm. And the ones that don't will go out quickly, typically, and give us feedback that we pass on to our clients. So we say, at the end, every Friday, we do a report of here's the activity on your deal, because we're literally focused on your deal, right? Mm-hmm. Here's what's happened this week. Here's who's in, who's out. Here's what questions we're getting. Here's indications that we've seen, right? So that we can give you that feedback as well. And sometimes, because it only matters, value matters, of course, what the buyers will pay for it, but also how the buyers perceive your business is telling as well. Mm-hmm. In some cases, we've seen feedback from buyers where our clients have said, well, that's actually really great advice. I'm going to go do that. Or right. COVID comes along and they say, well, the deal has to look like this now, where we share the risk in the future. And the client says, well, I'm not cool with that. I'm going to take the risk. I'm going to take all the risk and all the reward because I think we can make it through this. And I'm seeing positive trends, but you, Mr. Buyer, might not be seeing positive trends. So by having an advisor help you through this process, you'll get the proper feedback from buyers that matter. And you'll make the right decisions, find where the value of the business actually is from people that can write a check.
Right? Yeah, man. And deal terms are complicated.
Yeah.
You know, and it's hard to compare when you get 5 different offers and they're all very, very different in terms of structure, to break it down to what it means to you at the end of the day.
Yeah.
You know,
we often have 3 people look over deal terms. We put them side by side as best we can, and then we present them to our clients, especially when we're getting 6 or 8 at a time, right? There's a lot of different structures, and one might sound better.
Yeah, exactly. It might sound better, but also it depends on, like we've had people think that they want one thing, and then all of a sudden a strategic comes along and says, oh, here's what I bring to the table. It's like, but here are the deal terms. And they say, ooh, well, that might be interesting. You know, like it changes what you want. It's like, oh, I just want out. I just want as much money up front as possible and no clean break and walk away. But then all of a sudden the right strategic partner comes along and says, well, I'm not going to offer you all of that, but what I can offer you is this. And you say, oh, well, okay, let's talk about that, because I didn't think about that before. But also you mentioned that you get like 6 to 8 offers, and we don't use a list price, certainly to not limit. And, but yeah, that might open the door for lowball offers too. But just going back to the beginning, because we've gone through all of that pre-sale work internally, we know the range where offers should be, and we share that with the sellers. It's just not publicly available. So like we know the range that the market will support, the business would support, you know, like we get the multiples or whatever. I mean, we understand where all of that should fit. So the low ball offers are pretty immediately weeded out. But so we know the range that we're looking for. We know the range that the business would support. But yeah, for us to put a cap on that would be a mistake. For us to say, here is all it's worth, because we're going after strategic buyers, people who would actually want your business, and it would add, and it would make an immediate impact to their company. Means something a little bit different from an e-commerce buyer who says, yeah, I'll give you 3 times earnings or whatever. It's like all of that stuff completely changes when you're talking to somebody where your business would make an immediate impact to their company, and your brand has serious value and serious upside to them. They're going to see things a little bit differently. So don't put a limit on that.
Yeah, absolutely.
Ever. Don't put a limit on that.
And speaking of portfolio buyers or e-commerce buyers specifically, right? A lot of them don't want to do an auction process. They won't participate without a list price, which is fine. Some of them will, and some of them again have said, look, we know we're going to pay more coming. If you bring a deal to us, we know we're going to have to pay more because you only deal with quality. However, when we sell, we want to sell with you. We've had this on numerous occasions, right? They know we bring quality deals to market. So there is a reputation as a sell-side advisor that you've properly prepared a business for sale. Your clients are ready to sell. So that list it and see model actually pisses buyers off, because if you're not committed to selling, there's no friction, right? Our clients pay us a retainer to promote their deal, right? It's a commitment on both sides. We're paid to do that. Plus we have a success fee once we successfully close. So we're all committed to selling your business, right? And the buyers know that. And that actually plays into their offers, because they know that the seller really wants to sell, right? Because sometimes that's the question, is, are they just wanting to test the market? And that's annoying, because these guys have got real money to deploy. They don't want to mess around with someone who's thinking about it. They want someone who's actually wanting to sell.
And that same vetting process that we do with the buyers, right? I mean, we only want to bring serious buyers and put them in front of our clients, and they go through that vetting process. But at the same time, the buyers know that the sellers have been through our vetting process, and they know that if a deal is coming from us, it's prepared to be there.
Yeah.
Otherwise,
it's ready to go.
It's ready to be there. And so that, it catches their attention.
Yeah.
So
absolutely.
that's like, if something's been listed for 3 years and then they see it and then they want to get into diligence and they say, this is a mess, it's not worth my time, pass. There's what, 89 or 100 other businesses on the market that I can go and look at that would be in a better position than that one. So it's I mean, it's a quick pass. And obviously if somebody's been on the market for 900 days, I would probably take it down and start again.
So that's, I mean, to wrap it up, do you have anything else to add, or do you think that kind of covers what we were really trying to get at today? I hope.
No, I think I hope it does. I mean, certainly we can throw it to the group if there's any questions on that front, about what a broker does and doesn't do, and then what an advisor would do. I mean, I think, like, if you really think about the definition of each word, it might sort of give you an idea of the value that each bring to the table. I mean, there is a place for brokers. I mean, some people just want to sell their business and sell quick, and they just want to keep rinsing and repeating, and that's fine. There's a place for that. But
absolutely.
If maximizing the value of your exit to make life-changing money, like, you have to make some quality decisions.
Yeah, and take your time with it. It could the difference could be amazing. And that first example you gave,
it could be $2.5 million,
man. $2.5 million.
It could be $2.5 million. Yeah,
I mean that's not small change. You could do some good things with that. It's a lot of tacos. It's
a lot of tacos, a lot of Maseratis. I mean, we're talking.
You can buy Maseratis with that. You can buy a house. You can buy a nice house. Not just a house. That'd be a pretty nice house in most places. In Vancouver, that'd be like a 1-bedroom apartment, right?
Yeah, pretty much. That's a shack.
It's just a shack downtown.
Yeah,
on East Hastings.
There you go. Yeah, you got it.
Awesome. Cool.
All right.
Well, that's the difference. Broker versus advisor. That was fun. Thanks for playing along there. And well, it is still our name.
So sales at the FBA advisor? No, I will not. So sales at the FBAbroker.com. Come straight to my inbox. And if you want to chat about selling the business, or even just what's involved in selling the business, how can you add value to the business so you can sell later? If you're looking at a longer timeline, or if you're looking to sell now and just want to see what the market's doing, any of those scenarios, drop me a line, and we will arrange a time to have a call and see where we can help.
Awesome. Cool. Well, thanks everyone for listening. Thanks, Jeff, for jumping on and having a rant with me. It's always fun. And we'll see everyone tomorrow with What Buyers Want Wednesday. Jeff will not be here tomorrow, unless you are joining. You're not, right? You're off. You're off. Okay. You'll get to meet Julie, another awesome team member we have who actually deals with the buyers that we were just talking about. So Julie's going to be on the call tomorrow. We're going to go through the common criteria that we've got come in recently, but also her experience of coming in and dealing with buyers for the first time. So that's going to be fun.
I could jump on, but I have a feeling that Julie is going to be able to offer much more valuable insight than me sort of poking fun at what buyers are asking for. So that'll be...
And also, you should just take the day off, man. I'm taking Friday off. It's yeah, we need some time off here. We work pretty bloody hard when we got deals running. So
yeah,
awesome. Cool. All right. Well, everyone, we'll see you tomorrow. And thanks, Jeff. We'll talk soon.
Sounds good.
Bye.